Today you've actually been talking about the global commodity, the energy and shipping markets, and you mentioned many different factors that will make a change in the global shipping markets. What's your overview on what will be affecting the shipping market from now on till the next decade?
To the next decade. So if we look at the different markets, the crude oil market is going through a major downturn because of OPEC's production cuts. High oil prices has had the effect of China, for instance, reducing its stocking activity. The market's in backwardation. That's what we expect will probably continue for this year, that kind of a trend. Of course, OPEC increasing production again will be very beneficial for the crude tanker markets.
You've also mentioned that dry bulk ships are actually expected to show a growth in iron and ore bulks.
So dry bulk, we are expecting iron ore growth to be about 3 to 4% this year. Going forward, we expect that import growth into China to flatten out as the pace of infrastructure building in China slows.
What about grain and coal?
Coal has seen degrowth over the last 5 years as more countries are moving towards cleaner fuels, renewables, in keeping with their commitments to the Paris Agreement. We expect that trend to continue. Grain trade has seen tremendous growth over the last 2 years, and our expectation is that this year is not going to be very good because the Australian harvest, Australia is a major exporter, Australian harvest wasn't very good. We expect about 1% trade growth in grain for 2018.
What is your forecast with regards to the profits that the shipping industry and the newcomers will be making, if so?
So it varies depending on sector. This year, I would say, if you look at the best performing companies are probably going to be in the smaller LPG segment, followed by the dry bulk segment. And again, also within dry bulk, we think that the handy-size, potentially handy-max sectors are probably going to see good improvements. There's more utilization of vessels. Container vessels, liner companies did quite well last year. But we think it's going to be a lot of volatility in rates this year.
A prediction on how the market will actually change in the forthcoming years based on what we actually have in our hands right now?
Okay, so I think the market that is undergoing profound changes, likely to see profound changes, is probably the product tanker market, where product growth we expect will probably slow a little bit. It's growing at about 2%. Previously, we expected to grow to maybe 1 to 1.5%. In the past, it was driven mainly by increased vehicle efficiencies, but going forward, we think that the penetration of electrical vehicles will have more of an impact, at least in terms of product growth. Now, when it comes to product tanker demand, there may be a slightly different effect because there could potentially be more dislocations in terms of consuming areas and producing areas. And that is good for product tanker demand. So it's a mixed picture.
When it comes to the fuel sector, the LNG is supposed to be one of the highest in the fleet growth since 2010. That's what you mentioned earlier on.
Yeah, so LNG fleet growth this year is, on a percentage basis, it is the highest since 2010. That's correct, yeah. So as a result of which, we expect a fairly balanced market. And I say balanced because supply growth is also quite tremendous. Supply of new LNG, new liquefaction plants coming on stream is quite a big number this year. So we expect a balanced market.
Today you participated in the Greek Shipping Forum once again, and I would just like your view on that.
It's a fantastic forum, really a good mix of people from industry, and a number of other institutions, and some very invigorating discussions, and I've learned a lot listening to the presentations today. So thank you for having me.